We are BC Assessment, your trusted source for property assessment information. This video is about how BC Assessment determines assessment values for all industrial, commercial, and investment properties, or ICI for short. ICI properties include everything from warehouses and manufacturing facilities, to office buildings and shopping malls, to small storefront shops, to rental apartment buildings, and more. All properties in BC are assessed by a professional appraiser from BC Assessment. When valuing an ICI property, BC Assessment considers the same things that a purchaser would. Primarily, the physical traits of the property, like the size, age, location, the condition of the buildings, but also the rental income that is or could be generated. For ICI properties, our appraisers use the income approach to determine the market value, or the likely selling price of the property as of July 1st. Using the income approach, let's take a look at how BC Assessment would estimate the market value of Ms. Lally's property. Her building is tenanted by two businesses, a cafe and a clothing store. Each business is leasing the same amount of space, 1,000 square feet, and jointly provide $40,000 of annual rent income to the landlord. The tenants are both paying Ms. Lally for a triple net lease, which means they pay the rent, pay some maintenance costs, and the property tax. For this assessment, BC Assessment will look at other similar-sized properties in comparable locations. BC Assessment annually surveys the local market and determines the typical lease rates in this part of town compared to other parts of town. Condition and location matters. Older, less well-located buildings will be less comparable to newer buildings in great locations. The rent that Ms. Lally's property earns appears to be typical for a building in its location, with its visibility, size, age, condition, and use. BC Assessment's appraiser accepts that this represents market rent. Because for a variety of reasons, rental rates can vary considerably, it is important to establish market rent for typical properties. Keeping in mind that tenants may come and go, and there are costs associated with leasing the space, allowances or deductions are made for vacancy and expenses. The vacancy and expense amounts are based on inspections, industry reports, and staying current with market trends. For Ms. Lally's property, let's say a small percentage is deducted to cover any vacancy and expenses, netting her income down to about $37,000 annually. This information allows BC Assessment to estimate the net operating income for Ms. Lally's property. Similar to any investment, Ms. Lally's property earns a return over time for her in taking on the risk of investing in the property instead of keeping her money safe in a bank. This return, or ratio between income and selling price, is known as a market capitalization rate, or cap rate. BC Assessment determines the cap rate by reviewing the sales of similar income-generating properties. As the cap rate decreases, the market value increases when applied to the same income. In Ms. Lally's neighborhood, recent sales have indicated cap rates are around 3% to 4% for similar properties. So, let's say Ms. Lally and any potential buyer would expect a return of 3.5% for Ms. Lally's property. To determine the market value, or an estimate of price that a potential buyer would be willing to pay and Ms. Lally would be willing to accept for Ms. Lally's property, BC Assessment calculates the income-generating potential of the property and the cap rate. The result would be an assessment value of $1,057,000 for her property. Each year, the appraiser would use this same approach to update the assessed value, which is the market value, for income-generating properties as of July 1st. For assessment purposes, BC Assessment must split the land and building values, which are then added together for the total value. The land is valued as though it is vacant, and the building value, referred to as the improvement, is added separately. It is important to note that land values, especially in areas undergoing transition, are established by the market, which considers the most probable and productive use of a site, taking into consideration its development potential, and not necessarily its current use. An appraiser can advise you as to those potential uses. For Ms. Lally's property, remember that the total value was calculated at $1,057,000. So, if the appraiser estimates that the land value on its own is $500,000, that means the remaining difference would be $557,000 to account for the improvement amount, or buildings, for a total assessment of $1,057,000. When Ms. Lally receives her annual notice of assessment in January, the assessed value will look like this. And now you know how BC Assessment determines assessment values for industrial, commercial, and investment properties in British Columbia. Learn more at bcassessment.ca. We are BC Assessment, and we value BC.